welcome. You are watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest cues from the day street and help you also get your expert views to find out where exactly should you be positioning your funds as far as the stock markets go. What we'll also discuss today is the impact of the rising crude oil prices on the markets again. Right now, if you see, the Nifty is down by 0.5% at 19,621. So the momentum started to slip away on the FNO expiry session itself. Where is the pressure coming in from? You can see the Nifty banged down by about 0.3% odd or so, and that is leading to the losses on the major indices. You know, large part of the sectoral indices are down in the red today, barring just the PSU banking index and the small cap 100 index. Rest of the sectors are all down in the red, and therefore you can see the market breadth largely down. It's the Nifty IT index that's lost the most today, 1.5% down in trade, followed by FMCG, which is again down by 1%. 0.5% declines coming in on autos, consumer durables and the private banks as well. The healthcare sector has also slipped into the red. When we talk about the Nifty constituents, barring just about 10 or 12 stocks, rest of the stocks have all slipped into the red. What is still holding up in trade though is L&T. Record high levels, 1.7% higher in trade. HDFC Bank is seeing recovery in trade. 0.5% move on this one today. SBI, oil and natural gas, also Adani Ports, Adani Power, Power Grid, Adani Enterprises, Eicher Motors and Sun Pharma. These are the gainers at this point in time as well. On the broader markets, it is Finolex Cables, CE Infosystems, Indian Overseas Banks, all of these stocks showing upwards of 6% kind of moves in an otherwise weaker market scenario as well. But what we are going to be focusing on is to understand what is happening with the crude oil prices right now. Remember, the US crude oil futures extended their 3-month-long rally. We've seen US crude oil, the WTI crude, at the highest level in over a year after the crude stocks at a key storage hub have fallen to the lowest level since July last year in US. The US WTI futures have touched $95 a barrel, and therefore you have also seen the impact coming in on Brent crude, the global benchmark as well. $97 a barrel is what it has touched, just $3 away from that 3-digit mark as well. Now, to help us understand how to understand this entire crude oil situation is a very special guest with me. Mr. Navneet Damani joins in. He's the Senior Vice President and Head of Research at Commodities and Currency for Motilal Oswal Financial Services. Good afternoon, Navneet, and thank you so much for taking the time out for this discussion. Clearly, crude oil is the talk point of the day, and we have seen the initial nervousness coming in on the markets today as well, a 100-point decline coming in on the Nifty. Tell us first, what are the key reasons behind the sharp surge in crude oil prices?
Well, thank you for having me on the show. Well, over the last few weeks, months, we've seen crude oil pricing being very resilient and kind of having an upward momentum. And this journey started ever since crude oil market rallied, started from about $70 to $73, and now we're trading comfortably about $94, $95 for the WTI. So it's been a 20-25% straight rally for the crude oil prices, and a lot of supporting factors. You've had cuts from Iran, you've had cuts from Saudi Arabia, you've had cuts from Russia. Ad hoc cuts which were extended not only just from July to September, now from September to end of the year, and beyond that also is a bright possibility, and that is why you're seeing the support which is coming to the crude oil prices. Having said that, demand situation is not very rosy at this point, so the demand push is not very strong, but the supply side story remains very strong, and that is what is supportive of the prices. The last $3-5 from 90 to 95, I think personally is a bit of exuberance, and there is more of fraud that is getting built up at this point in time. So the market is now bracing for 100 or probably 105, 110 levels. But my personal thing, or as a company, we believe that holding above 100 or even surpassing 100 for a very long period of time would be a very difficult task at this point. We have to see strong recovery from China coming in. Unless and until that happens, unless and until you see inflation concerns being mitigated, you will find it very difficult to stay above 100. So my bet is that we are at the fag end of the rally, and little caution is advised from here.
Okay, interestingly, because we did see Goldman Sachs and a lot of brokerage houses reporting that $100 a barrel is what they really see, and the latest surge has also come on the back of OPEC plus production cuts, especially by Saudi Arabia, and the constricting global oil supplies at this point in time. I want to understand, next week we are all keeping our eyes on the OPEC plus meeting again. What do you foresee here? Any decision over here that could further lead the momentum upwards to $100 a barrel?
Well, another round of cut or extension of the cuts which are already announced beyond December or beyond March is definitely going to push prices above 100. But for how long is the question? Well, I
Yeah.
think that the supply side story is already played their hands, and now it is going to be the demand side which has to contribute. Otherwise, we are calling it a long shot. Now, these reports that we read are typically from a 12 to 24-month perspective, and some of them are dated till 2026 also, where they anticipate prices to go to 120 and 150. So, 3 years from now, what is going to happen is a difficult bet that
Sure.
I would want to bet on. But from an immediate perspective, from a one quarter perspective, if you ask me if crude going to be above 100, then if the demand side story does not materialize, I think we've overplayed our hand. We can look to have some caution. But if there are more production cut in store, which could come as a surprise or an ad hoc, which has happened recently, then definitely 100 could be seen, but not beyond that.
Okay, not beyond that. But do you see a cool off happening after the $100 as well? What is your long term target?
Well, our view is that, as I previously mentioned, there is some froth which is already start to build up. Maybe it could slide little higher, maybe three, because in this kind of exuberance where market is rallied about 25% in a matter of 3 months, 5% will not matter if it overshoots also, and this is
Okay.
typically where we are into. So if this has to happen, crude might on the domestic front go to 80 to 8,200, or for the WTI go to 9,800 also. But my conviction is coming from where the difference between Brent and crude oil has narrowed very significantly. The difference used to be comfortably about $3 to $5. Now it stands at less than $1. So there is going to be some kind of pressure or some kind of reversal anytime soon. Maybe in 15 days from now or 1 month from now. But this spread historically has not
Okay.
been this narrow, sustaining at these narrow levels for a long period of time.
Right. I'll talk to you about the rising dollar index now and the impact of that on the precious metals, especially gold. Gold has slipped to a 6 month low as well. How do you see that really moving going forward from here then?
Well, previously also through your show, we've discussed that gold price is not something that we favor for this season, and we think that it could be giving you negative returns. Also, we were standing tall at about 11-12% returns for the year, but now most of these gains have faded off. I feel that most of the tailwinds have now started to become headwind. We are kind of unless we see a massive rally into crude oil prices and inflation triggers concerning once again. I think inflation part is taken care of. Maybe one possible rate hike from the Fed, and then we are done for this year. And as we approach 2024, maybe possibilities of cut as we approach the second half of 24. So that could be a possibility, which could be having some upper hand of the goal. Dollar index has been very sharply rallying for the last 10 successive weeks. They have been adding gains, and we stand close to 106.5 at this point in time, which is also not a great factor to look at gold bulls. So all in all, geopolitical stress has started to reduce. Economic data have started to come better. So I don't see big catalyst to drive gold prices significantly higher. Even if there
Okay.
will be some few triggers, they could push prices by about 3 to 5% higher. But from a very momentary or short-term perspective, the probably 1 quarter or 2 quarter picture is not very great, and I think there could be a slide towards $1,800 also in the near future. On technical parameters, also we've broken down $1,900, and there is a bright possibility that we might slide about 3 to 5% from here in a very short span of time. So I'm not very
So,
positive on gold.
okay. Navneet, on the MCX as well, what is your outlook on the gold prices by Diwali? Where do you see?
Well, I see Rupee being a spoil sport. Otherwise, domestic buyers could get a better price vis-a-vis what is happening on the COMEX. So, Rupee is trading very close to lifetime lows, and I don't see that any kind of appreciation to having in the near. We might slide eventually to 84, 84 and a half also, which could curtail some kind of fall which is expected on the COMEX. I believe that by Diwali or probably by the end of the year, we will be below 57,000 and in best case towards 56,500 also.
And on the spot levels, what could that be?
Well, spot and MC is largely move in contact or maybe about 200 rupees difference here and there, but pretty much the levels are likely to be about 56,500, 56,700 levels.
56,500 or thereabouts going forward. All right. Many thanks then, Navneet, for being with us on the show and sharing your outlook on both crude oil and gold going forward from here. So that's as far as the crude oil position is concerned. While the markets may be worried about the sudden sharp spike that we've been seeing, Navneet here gives us some assurance that, even if we see a surge beyond $100, it may not be sustainable and it might cool down, significantly because the demand conditions are not very robust to support these kind of levels going forward from here. Well, let's welcome our guest, our market guest on the show now. Mr. Kranti Batini joins in. He's the head of research at Wealth Mills Securities. Welcome, Mr. Batini, and thank you so much for taking the time out for this discussion. We've been discussing all about the crude oil prices, and that is largely the talk point. Of course, there are a lot of headwinds that we've been discussing, whether it's the rise in dollar index, whether it is the hawkish Fed stance that continues to talk about elevated, interest rates for longer. And now there is this crude oil prices which have suddenly shown a very sharp spike overnight. Over a year high for the WTI crude, $97 for the Brent crude as well. Your own thoughts on what these rising oil levels really mean for India, which is the world's third biggest importer, and what does it really mean for our stock markets really?
Yes, actually, always the rising crude oil prices never been favorable to markets like India, where, as you rightly mentioned, we are the largest importer of crude. So rising crude oil prices definitely put pressure on Indian economy and inflation. But what we can see is the crude oil prices have been on a long consolidation phase from quite a long time. And we have seen some kind of top up and breakout in crude oil prices. But I believe personally, I completely agree uh, with the theory. I don't believe crude oil prices are going to last on a higher note for more time. I believe 100 rupees is the $100 per barrel is the top of crude oil prices. Probably it might rally another 5-10% from there. But I believe crude oil prices have peaked out at this point of time.
Sure.
As I have to mention, as you mentioned, Goldman Sachs in the year 2000, beginning of middle of 2007, they come up with a report. Crude oil prices are going to be on a higher note, and they predicted crude oil price to be in 2007. I'm mentioning at $250 per barrel. But the fact of the matter is, crude oil prices touched a low of $36 per barrel in the next 2008. So these kind of predictions do come always, but investors need not have to worry. But with respect to the stock market is concerned, actually, depressed crude oil prices and high crude oil prices never good to stock markets. When there is a depressed crude oil prices, that reflects the weakness in the global economy. So some kind of theory do says the when the crude oil prices are low, that will be helpful for the stock markets in India. I don't agree with that theory. So
Okay.
we need to have a balanced crude oil prices with respect to Indian stock
Sure.
markets is concerned.
Sure, understood. So you are also saying that, in case, we do see $100 a barrel on the mark as well, beyond it, it may not surge too much and it may not be, something that one should be worried about right now. But when does crude oil really become a problem? Is that something that one should at least keep in as foresight as when one invests in the markets for long term?
Yeah. If the sustainability of this $100 per barrel, if the crude oil further inches above $100 per barrel, and it's going to stay in that level for a long period of time, definitely it's going to create pressure on Indian inflation and the current account. Also, it's going to create inflation. But we need to wait and watch. It is too early to say the crude oil is inching higher above $100. It is completely premature at this level. Of course, since the stock the commodity has risen a lot, so the focus is more on crude oil. At this point of time, we also need to think, Sachi, S&P 500 is trading at 3 months low, whereas contrarian to this, the commodity prices, the West Texas crude, WTI crude has rallied to 1 year high. It's some supply side constraints at this point of time. I don't think so. It is purely driven by the demand side pressure with respect to crude oil is concerned.
Okay. Currently, with respect to the current prices of gold, sorry, crude oil, how would you really looking at in terms of the sectors? We're looking at a surge in stocks from the upstream basket today, ONGC, Oil India, and a negative impact, of course, on the oil and marketing companies as well. So how would you really advise an average investor to really position themselves with the rising crude prices? Which are the sectors that one should focus on, which will benefit? Which are the sectors that one should completely stay away from right now?
Yeah. In the medium to short term, Sakshi, of course, as you rightly mentioned, the producers and are going to benefit. If you see today, there is a sudden surge in companies like Hindustan Oil Exploration. They have oil rig and they started producing some amount of crude, crude at this point of time. So today, the stock is up by around 7 to 8% during the day. In fact, during the day, the stock was up by 10%. Other reasons also there for the surge in this stock. But coming to in the medium to short term, the paint stocks which are fully priced in and due to the increase of crude oil, there will be a pressure on the margin in the medium to short term. And also the aviation, where the main focus will be on the aviation fuel. So the margins can be under pressure in the medium to short term. So the paint as well as aviation industry is going to have a medium to short term margin pressure if the crude oil is going to be on a higher note in the medium to short term.
Okay.
The prolonged high crude oil prices definitely is going to have impact on each and every sector for a period of time. But in the medium to short term, these are the sectors that are going to impact immediately.
Okay. Well, many thanks, Mr. Vattini, for being with us on the show and sharing your insights on the entire macro scenario with respect to crude oil prices surging at this point in time and the way that investors should be approaching markets in that context too. Meanwhile, 108 point of a decline for the Nifty. It is hovering near 19,600 odd levels. The Sensex is down by 350 points at this point in time. You can see largely most of the sectors down in the red, barring the PSU banks, where high beta, low ticket items are available, and investors are clearly going in for those cash stocks and not really worrying about the kind of F&O expiry pressures that we've been facing. On the Nifty level, L&T, HDFC Bank, SBI, Adani Group stocks, Coal India, Bharti Airtel, these are the gainers and are holding up in an otherwise weaker set of the scenario. Broader markets clearly the better off ones. Small cap 100 index doing better, about 0.3% higher in trade. And in the Nifty 500 also, you're seeing a whole host of the private PSU banks as well as some companies that are actually showing a lot of momentum. Finolex Cable, CE Info Systems, Indian Overseas Bank, Central Bank of India, CSB. These are the stocks that are doing well in an otherwise weaker set of the scenario. We'll continue to track market movement for you through the course of this day. So do stay tuned with us onto Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.
Our guest for today is Mr. B. Thiagarajan. He's the Managing Director of Blue Star Limited. This company